Welcome everybody to another webinar, and thank you for joining me. It is Wednesday, middle of the trading week. There is a fair bit of news out for the remainder of the week. First of all, just give me a yes if you can hear me nice and clearly, and that you can also see the screen. You should be looking at the Forex Factory calendar. Morning Sarah, Marcus, Anthony, Khan. Morning to everybody. Yep. Okay, so a fair bit of news out today and for the rest of the week, so just going to run through this. We could see a quiet rest of the week as a result of this. So we have for Wednesday, we have non-farm employment change at 115 for the dollar. We can expect to see either the markets quiet up until that point, or we can see a reaction at 115. So I'm just going to make a note of it. 115 for the dollar. Could see a reaction then. Then later on this evening we have more dollar news. At 7 o'clock we have FOMC statement. We have at 7:30 FOMC press conference and federal funds rate as well. So between 7 and 7:30 more dollar news. So again, we just may see the market stall today until we have these news events that come out. We do also have news on Thursday. We have pound news out at 12 o'clock. Quite a lot of pound news out, and at 12:30, and a little bit more dollar news out at 3. And then on Friday it is FOMC day, so a busy week in terms of the news, and it could go one way or the other. We could see the markets just be completely dead until those news events, or we could see virtually no reaction at all. So let's go and take a look then at a few opportunities. And first of all, I'm going to go over the pound Aussie. Now this is no longer a valid opportunity, but this was a trade I took which was not sent out as a signal. It was a little bit too aggressive for the signal service, and I'm just going to run through what this trade was. Now if you recall, we did run over the AB equals CD pattern in the last webinar, and you can see we still have the workings out. And I do like having the charts not touched from our last webinar because it just shows what we were looking at. And we can see we had this AB equals CD pattern. It came up and tapped the 1618, which was what I needed, and also the 382 fib. Now from there we saw a move lower, and we'll run through all that in just a moment, but let me delete it off and we'll do the higher time frame analysis on this. Yep, calm, dangerous, lots and lots of news out today, so particularly on the dollar, so I'd be very wary about taking dollar trades, although the way things are setting up, my initial thought is that we're going to see bearish movement, certainly until the news anyway. So if you do have any trading opportunities, please pop them in the chat and I'll take a look at them. If not, the final thing for me to say is the purpose of this room is to review the opportunities that meet the rules outlined in the educational material at freeforexeducation.co.uk. Let's take a look at the pound Aussie then. Did anybody get involved in a trade on this pound Aussie? The move lower. You know what, guys? Does anybody wear glasses to look at their charts? For the last 3 or 4 days, I don't know whether, when I put my glasses on, my eyesight seems worse. I've wore glasses now for nearly a year when I've been looking at the charts. It's so bizarre. I'm going to have to keep them off. So strange. Right. On the pound Aussie, on the daily, we had the move lower, the pullback, the move lower, the pullback, the move lower, the pullback. Problem here is that we are within this structure zone, and we have put in a long test candle down to this point. Morning Arson. And when I looked at this the other day, in fact it was just this morning, I've shown this to you guys before. Sometimes the candle can change a few hours later. It can either be on the dailies, the 240, the 60. I showed you an instance of that in the live webinar where it was I think a doji one time, and then when we looked at it later it was slightly different, and this was more of a rejection candle when I looked at this morning on the dailies, and it's changed slightly. Anyway, we've held the structure level, so there's no confirmation that we're going lower here on the dailies, but on the 240 we have had the violation to the downside, and we've seen a pullback. I'm just going to delete all this information off, and there were several areas here that you could look for shorts. From the closes of the candles to the wicks was your highest probability, but then you've got this internal structure level just here. As we drop down the time frames, we go down to the 60 minute. This was what I pointed out, so we had a move lower, and I said this would be the area where I would pay close attention to, right here. This was a breakout pattern, and typically these breakout patterns, the middle of them, this is where we tend to see those rotations. And as we drop down to the 15, we had this AB equals CD pattern. So we'll move that up. And we know that we had the 1618 and the 382 fib up there. What actually happened though is we actually came down and hit the 382. However, bigger projection for me based off the 240 is that we are going to go and retest these lows. And so I actually took a trade based on this head and shoulders. So we had a move higher, a pullback, a move higher, a pullback, and then a move higher. Now the reason why it was too aggressive for the signal service was because when I looked to the left shoulder here, and I highlighted the wicks just here, so we'd come up and tested this level first of all, and we'd come up again just here, and we'd put in a 3-bar reversal. So just give me a yes if you can see that, guys. We had a big bullish candle, we then had a rejection candle followed by a lower close, so that gave us a 3-bar reversal. Just give me a yes if you can see that. Okay. Yep. And what I then did, because we'd actually held the left shoulder, but the AB equals CD pattern technically played out, and so was a lower probability trade. I got my stop 12 pips above the left shoulder. Sorry, no, I think it was 12 pips above this psychological number, which was right here. And as you can see, just as my trading has been for the past, going on for the second week, just stopped out. So I took a 25 pip loss on there. As I say, it wasn't quite good enough for the signal service. The way I would have handled this now is we've double bottomed, we violated to the upside, and we're pulling back for a 26.18. So at this point, if I was still in the trade, I would have now moved to break even though targets haven't been hit. We've double bottomed and it's been confirmed as a double bottom. So yeah, not included it in the figures because again it wasn't sent out as a signal, but yeah, stopped out for 25 pips to the pip on that trade. I think it was 25 pips for, I was playing for a retest of the lows for 123. So we'll see whether or not that trade plays out, but if I was still in it, it would be a free trade at the moment. Arsan almost burned my account yesterday because of this, because of the pound Aussie or because of the news. Khan makes me so angry because of these trades. They are difficult, and I know, Khan, that you're a trader. You take plenty of trades throughout the day and throughout the week, and we've got to understand that I go through phases as well of having trades that just stop me out, most often to the pip, and we saw that last week. You know, last week we could have finished 60 pips in profit if it wasn't for 4 trades, 3 of them stopping us out to within 2 pips, and one of them we moved to break even because of the news, went 7 pips to targets, stopped us out. 2 days later it hit. And though they're difficult trades because, you know, big losing week for me last week, and it could have been a 50 or 60 pip winning week, but for just those 4 trades that just stopped us out. And this was another one for me here. It stopped me out within 1 pip. This may go on and hit targets, it may not. But it's tough, you know, if this goes on and hits, this is a 123 pip trade that again has gone on to hit targets, but unfortunately have left me hanging out to dry. And these are very difficult trades to deal with, particularly when you're in a drawdown as well. And there's nothing we can do. We simply just have to stick to the plan. I'm still up. You know, last month was a fantastic month for me. A few weeks ago I had a break-even week. Then I had last week the losing week. This week I'm in one trade, which is the euro yen. That's currently losing. For my personal account this week puts me a few pips into arrears. And we'll just see how the week plays out. And what we've got to look at is that this week is full of news, and we could see the markets dead until those news events where we see big movements, which will be it'll be unlikely it will offer any opportunity to get involved. And we could see that today, Thursday and Friday. And unfortunately, I've just got to sit on my hands then and wait and say, well, it doesn't look as though this week is going to be the week that I get myself out of the drawdown. I'm probably going to have to hold the drawdown into next week. But yeah, those trades are tough, those ones that just stop you out. In saying that, all trades are tough, whether you're winning, it's tough because you don't want to hand back the profits. Whether you're losing, you don't want to give away any more of your profits. Or whether you're just being stopped out or you just missed targets by a couple of pips. It's all psychology, isn't it? It's all mentally tough. And these are the times that we need to not take trades that don't meet the plan. Okay, we want to make sure that the trading opportunities are correct. We want to take them at the right times, not just before news events, not straight after them. We want to wait for those higher probability trades. Good morning, Jamie. Morning. You've not missed much. Just talking about how I was just stopped out to the pip on this trade on the pound Aussie. It wasn't one I sent out as a signal. It's a bit too aggressive, but it was a head and shoulders. We looked at it the other day, the AB equals CD pattern, which turned into a head and shoulders. Pound Aussie, Arsan. Okay, as long as you're using proper risk management, Arsan, then you shouldn't be anywhere near blowing your account. So I recommend you need to go and do your back testing, of course, which will determine what your position size will be. But a position size of 20,000 per a £10,000 account, that will mean roughly every 100 pips is around 1%. And the way that we should look at trading is that it's a slow gain on our income, so maybe 3 to 5% a month as our income, and over the year we look at making maybe 60%. What we don't want to do is risk, say, 3, 4 or 5% per trade, hit a losing streak, and then we end up almost blowing our account, because it does absolutely nothing for us apart from blow our money. So that was the pound Aussie. Did anybody get involved with the AB equals CD pattern? If you was aggressive, then it was a valid opportunity, because we came into structure and we had a lower low, lower close, and you could have played for either fib based targets or done what I did and held to see if you got the breakout. Now we did break out to the downside, but whether or not we go higher or lower here because of this double bottom, I'm not too sure. But if you did get involved with that, just let me know. But I'm going to move the pound Aussie back to where it should be, and we'll take a look at a few things that I'm looking at. One of them is the Aussie dollar CAD. We do have a daily break below, close below. Arsan said, yeah, I understand. I actually put high lots instead. And it's very difficult to, whether you're up or down from a psychological aspect, it's all part of sabotaging your trades. Now, if you use different position sizes for different types of trades, or you increase your position size into a trade, well, that's fine. But as long as you stick to one method or another and it's being tested, simply just putting more of a position size onto a trade, what tends to happen, because I did it, is you end up putting more on what you think is a good trade, and inevitably that one loses, and your other trades which you had a smaller position size on inevitably go on to win. So we want to be very careful when we do things like that. Let's go and bring over the Aussie dollar CAD though, and we will take a look at this. So we still have our workings out on. You can see a bigger picture. There was a cipher pattern, and let me know if anybody takes advanced patterns about ciphers and Gartleys, because from my reckoning they've just been destroyed the last couple of weeks. Every pattern that I've looked at has lost. I think there's been 2 or 3 ciphers, a couple of Gartleys. So yeah, this one lost, but what we were looking at is a potential double bottom here, weren't we? And we'd come down into this reversal zone, and we said that this was not a valid double bottom, and the reason for that was that this point just here had already come into structure. So the double bottom had already come into previous structure where I thought it would already come to. So this is why we drew it out. That would be waiting for a violation, so a violation above this level, the pullback, and then a chance to get long. And simply waiting for that additional confirmation has kept us out of that losing trade. So we will delete that information off, and we'll take a look at the dailies. I know Mark has posted this in, that we'd had a daily break below, close below on the Aussie dollar CAD. This was on his radar. Jamie says FX Book has a great tool to calculate position size for anyone that doesn't know. Yeah, you can also, I did put a third party link onto the website. I'll just bring it over so you guys can see it. Where did I put it? Okay. So if you scroll to the bottom, to the left here, third party links, you can use the calendar. So you got Forex Factory calendar, you got position sizes, which is my FX book. Just as Jamie said there, they're very good in my opinion, because they're directly linked to the market. So whereas a lot of position size calculators, you need to input what the current rate is and where your stop loss is going to be in terms of the rate, this is already linked. So all you do is you just put in your currency, the account size, and then you just put in the amount that you're risking your stop loss and the currency pair, and it calculates it for you. So it's very, very handy. The other third party link was just TradingView, so they're there just in case anybody wants to use them. Andrew says, yep, I've had a run of losers with advanced patterns on the Aussie dollar CAD. Yeah, it's what I've noticed, Andrew. I've just, my currency pair, I mean, I don't log them, but I've just been noticing that there's been a lot of losers. You know, I've seen losers as well, not just in those advanced patterns, but my structure-based trading has not been great the last couple of weeks either. So let's get back to the Aussie dollar CAD. Structure level on at the lows just here, and if we draw out the trend, we had a move lower, a pullback, a move lower, a pullback, a move lower, then we violated to the upside, and then we violated to the downside. And I do not have enough data loaded here. Let's just kind of load another 1,000, see how long it will take, and we'll see if we can look at some more historical data. I tend to only have 1,000 candles loaded. It can make my computer run a bit slow if I have more than that. I actually have 13 charts open all the time, so I do like to keep it to around 1,000 candles. But does anybody have anything on the Aussie dollar CAD? Okay, let's look left, and 2,000 isn't enough. So I do know that we're at something like 11-year lows, So I would not need to load some more historical data, but we do have that confirmed break below, close below. And if we highlight the wicks, then you could look for a first chance entry to get short in this highlighted area. So if we drop down to the 240, Andrew says, hopefully that means winners are coming. I hope so. I am in a Euro Yen trade, which is a breakout pattern, and it's losing. It's the theme of the last couple of weeks for me. It's been pretty shocking for my trading, if I'm completely honest with you. Most of the trades for me have been on the pound, and that whipsaw movement we've seen as a result of the, of the news and the elections and Boris, just not gone very well. But I've had it, in saying that, I've had it other times where I've been in trades. I remember a few FOMCs where I hold my positions now for the FOMC because we don't see that whipsaw action anymore. I only hold the bigger trades, but I remember a few times I've been in 3 or 4 trades during the FOMC and all of them won. And I've actually recorded all of them winning. And that's the way it goes sometimes, Sometimes the news helps, sometimes it does not. So if we're looking for shorting opportunities within this highlighted area, then we do have some internal structure here as well. And we can also drop down another time frame to the 60. And on the 60, there is not a great deal here. Not a great deal. We can look for maybe an advanced pattern, X to A, A to B, B to C, B to C, CD completion, maybe, and a chance to get short. Playing for a retest of the lows. That's going to be some time away. Let's go and take a look at the 15. And on the 15, we do not have a great deal. So I'm really waiting for price to come as a minimum to this area. And we'll see if it offers any opportunities. Does anybody have anything on the Aussie dollar CAD? Just going to change this back to 1,000, otherwise it'll run slow. Let's move the Aussie dollar CAD out of the way then, if there's nothing on your radars, guys. Move it out of the way. How's everybody's trading been the last 2 weeks? I think you all know how mine has been, but I know a few of you have managed to catch a few of those runs on the pound. Are you up or down this week? Get rid of the Aussie dollar CAD and we will take a look at... Okay, we'll take a look at the Euro New Zealand next. It has a potential to see some continuation to the upside, the Euro New Zealand, and I'm going to show you. It's not the highest probability trade, so it might be one that we leave. Let's delete this information off and go to the daily time frame. Arsene says pretty good, but having a bad time this week. I'm really hoping my Euro Yen trade goes on to win. That'll put me in profit for the week. So, Euro New Zealand. We know now that our AB equals CD pattern has hit targets and it has come into this outside return. So we've had this 3-point move, haven't we? We've had 1, 2, 3. There is room for this to come lower, all the way down to this lower structure level. And here on the dailies, a lower low, lower close would be a second chance entry. But right now, if I put a structure level on just at this level, we're seeing a reaction at the 16900 psychological number. So if we drop down to the 240 and we look for an entry reason, then you could actually use this lower low, lower close candle as your entry reason, but this is way too aggressive for me. Stops would need to be all the way up here, targets would be down here. It's only offering a 1-to-1 and this will be well over my 100 pips at risk at 304 pips. So what we do is we start looking for some internal levels of structure. We know that we've had the 16900 tested. We can also look at the RSI and say that we did have the RSI that went over, bought there at around 92. I'm going to put two structure levels in, one at the close of the candles and one at the wicks. We're going to look for some internal structure. Right here, this is a key level. It's a key level, guys. So we came into this and look at the size of the bounce that we had. Quite importantly as well, when I talk about these, is we came down, we spent very little time down here, we hit it and then we just rocketed off the other way. So this is a key level at this 1,9,000 psychological number where we've seen a reaction in the past, and it was recent as well. We also had a little reaction there. We saw a bit of a reaction here as well. Let's keep looking left. And then we've got a zone here, haven't we, where we've had a triple test. 1, 2, 3. And on that last triple test, we saw a big reaction to the downside. And we've seen some reactions here as well. Okay, so it is an area that has had a reaction in the past. And with a psychological number and the RSI, it is not surprising that we have seen a bit of a reaction here. I'm just going to catch up with the chat before it gets too big. Arsene, pretty good, but having a bad time this week. Khan, sorry, was disconnected as likely bad spell starts. Jamie, all my setups were thrown out the window this week after the pound bearish momentum. I am flat all week, which I don't mind. 2, though this is what it is. Yep, absolutely. I don't mind being flat. I don't like being in arrears, but that is part of trading. Jamie, lots of break-even trades last week. One take profit for 60 pip last week, but stopped me out then. Yep. So there isn't any recent structure, and when I say recent, this consolidation area here is where I would have loved to have seen lots and lots of wicks, lots and lots of tests, so that I can look for a double top in this zone, but there isn't. So let's go and take a look at the 60. And on the 60, this is what I was looking at. So we had a move higher, and we saw the market moving higher in this channel, which was not valid. We saw a pullback, we saw a move higher, and then we have this little breakout pattern here, which broke to the upside. And I do say time and time again that the middle of these are great areas to look to get involved with long trades. And this is where we're at the moment. We're down within this zone. The question is are we going to see a move back up to retest this level and potentially go higher? Or because we've seen the lower close and we've got the RSI confirmation and we've got the 16900 psychological number with multiple tests in the past, are we just going to see a continuation to the downside? So this is why this is going to be a lower probability trade for me, even though it's setting up for trend continuation. We'll take a quick look at the 15, see if it's setting anything juicy up. Okay, RSI went oversold. We're in the middle of this pattern. There is no double bottom. You could be very, very aggressive for me. Khan also in uptrend. Yep. And this is going to be a bit too aggressive for me, but you might have a back pattern. No, you don't. Nowhere near the 50%. Cypher. No, you've got a retest down here, but it's not anything that I would even look at, to be honest with you. So it's a decision point, if I'm honest. You can see this breakout pattern more clearer here. This would be a decision point as to whether we break to the downside or go back up for another retest. In fact, just looking here on the 5, you had a little double top up here. Don't think it quite pulled back for 26.18. It looks close. Did it? Yes, it did. Double top, break to the downside, pull back for 26.18, and then the continuation down. So It's an opportunity, but it's not one that I'm going to be taking. The probability just isn't there for me. I don't know whether we're going to break to the upside or to the downside on that one. So it's one that I'll just make a mental note of. I will monitor the trade and see what happens to it. Any questions on the Euro New Zealand? If I'm honest, today is probably going to be another day of nothing. I'm going to go out after this. I'm going to get a bit of exercise done. I've got a little bit of work to do in the garage downstairs. I've got family coming over tomorrow, and in about 2 weeks I've got more family coming over. I need to clear a little bit out the garage. I've got some in the bedroom that we have downstairs. It's a very big room. It's a gym as well. But we've got 2 sofas that we've got in there, which were the kids. I think a lot of you guys know that I did the playroom out and changed it to an office. So my office now, we have 4 desks in here, but we used to have two sofas for the kids there downstairs. So I got to clear out the boxes in the garage and move them to the garage, and they're currently up for sale. Problem is, paid €550 each for them, and everybody in this island is cheap. We tried to sell them for 100 each, but they're not budging. Nobody wants to buy them. Khan says anything in the EuroCAD. We're going to take a look at the EuroCAD shortly. Let's go and bring over though the New Zealand dollar, and this is very, very similar to the New Zealand yen. What we looked at last time was we had this harmonic move, and we said that I think it was this area, it may have been here where these 2 arrows are. We said that you do have a potential double bottom here, though it's not going to be valid for me because it did not appear at structure, and we did the right thing. We stayed out the trade, and so the market has now come down to our highlighted price reversal zone just here. So let's delete everything off and look at the dailies. And on the dailies we had a move higher, a pullback, and a move higher. Now we didn't have that long extension, and apologies guys for you keep hearing this, but it is the best way to learn. Long extensions, small pullbacks. Long extensions, small pullbacks. We did not get a long extension, and so that actually means that we tend to see a deeper retracement, and that's exactly what's happened here. We've come down into the wicks. So if this is valid for you for trend continuation, I would not be playing for any level of beyond this point, and if you want to be conservative, I'd say this left shoulder is your best place to take targets. Let's go and look at the 240, and here on the 240 there is not a great deal here for me. If we move our price reversal zone down to the close of the candles and the low of the wicks, you can see we've just come into that area now. It looks as though we have had the RSI confirmation, so we went oversold at around 15. But the market is just not setting up in a way that is going to give me a valid double bottom on this time frame. And in fact, we're just moving very directionally here, aren't we guys? Very, very directionally. Let's go and take a look at the 60. Khan, not doing anything means saving money rather than risking on bad trades. Absolutely, absolutely. I would love nothing more than to go ahead and take 5 trades right now and hope and pray that it will get me out of my drawdown. But I know I've done that in the past, and all it did was get me deeper and deeper into that drawdown. And so the best thing is just to basically just suck it up and just say, this is not going to be the week that I'm going to get myself out the drawdown. Here's the thing, I trade a lot of pound pairs, so I will take a trend continuation on the pound New Zealand and the pound CAD, and those 2 currency pairs have very big ATRs. The pound dollar does as well, the pound dollar and the pound yen, we know those. But you know, I go every month and probably every week actually, and easily take at least 100 pip winner, sometimes a 150 pip winner, and it only takes just one of those trades and I'm out of my drawdown. That's all it takes. And as long as I don't make the drawdown worse by actively sabotaging or taking trades I shouldn't, I know that that one trade is not far away. In fact, we'll take another look at it shortly, but I think it was the pound New Zealand where we was looking at buying the ABCD pattern and was looking at buying, I think it was a cipher or something on there. But if you looked at it the other way and looked at trend continuation, it gave you a triple top and gave you a 320 pip winner. I think it was Arsan that won on that. I couldn't take that trade because we was looking at buying the market. And it, again, you know, it's just one of those trades that we need to come off, and that trade would have put me well and truly into profit. So I'm quite happy just to wait, and I'll wait for those valid opportunities. Okay, Jamie, it would be around the 61.8 fib also, just judging by my eye. Okay, Andrew, why does the pound tend to have a larger ATR? It's just a bigger mover. I would assume that it's because more people, well, I actually don't know. I actually don't know why it has a bigger ATR. I know it moves more than the other currency pairs because it's traded more, but that would only be the pound dollar. In terms of the pound New Zealand and the pound CAD, they're not main currency pairs. So I actually don't know. Don't know why they have bigger ATRs than others. It's a very good question. Probably something we should Google. I don't know the answer to it. If anybody does, please put it in the chat and enlighten us. So here on the 60, well, even though this is looking as though it's trend continuation, we had the move lower and the pullback, the move lower, 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 and the pullback, and the move lower. I'm not projecting a move beyond this point, or at least as per my rules, I can't take a trend continuation trade when we've already reached the area where I would have taken targets. So if I got involved up here with a trend continuation trade, my targets were here, and I can't physically go and take a trade when we've just reached our destination because I have no confirmation that we're going to go lower. So there's nothing here for me. Bigger picture is we could see a move to the upside. Just the way price is moving, it's just not offering me anything that would want to make me buy or sell at the moment. Here on the 15, this is just kind of ugly. Would have been nice to see a flag here. Directional move, would have been nice to see a flag. But it's not going to be valid for me, that. Nope. Let's go and take a look at the 5. That's ugly. We do have this area being respected here though. Very likely that this might be the turning point where you'll see a move to the downside here. I would, from the look of it, I would suggest that there is still some bearish movement left in the New Zealand dollar, but it's nothing I can trade. It's a shame that that isn't valid for me, this flag. 1, 2, 3, there's your 4th touch up here. We're clearly holding this level, a sign that we're not violating to the upside, and if it's valid for you, then this would be an entry to get short. It hasn't really come into a structure level that I would be keen on. Actually, here you go, looking further left. You have this right here, don't you? This double test. And a little bit further left, I saw this big wick just here. So there is an area here that's being respected, and that's probably why we're holding this structure level. But yeah, this could be an opportunity to get short. It's just not going to be valid for me. I'd have your stops just an ATR above the high. ATR is only 4 though, so I'd probably have it 2 ATRs above the high and play for a retest of the lows. But it's not going to be valid for me. It's not moved the way that I like to see flag patterns move, so it's not going to be valid, but it's likely we're going to see a move to the downside. Any questions on the New Zealand dollar, guys? Yeah, dollar pairs can be quite dangerous today with all the news. I believe the large ATR would have the volatility of the currency, volatility caused by the economic stability of the country, Brexit uncertainty also a factor. Yeah. Well, I mean, as we see more movement, the ATR increases, but I don't know the reason why. Say the pound CAD pretty much always has a very large ATR compared to the Aussie dollar CAD. Now I know it goes off how much it moves, but I don't know why it's physically always moving more than, say, the Aussie dollar CAD. And it isn't to do with the fact that that's traded more, because Aussie dollar CAD is a main currency pair. Let's move the New Zealand dollar out the way, and we'll take a look at the very similar setup on the New Zealand yen. And New Zealand yen, we are pretty much down within this price reversal zone, and with our drawings out we said that we could look for a little double bottom down here and a small reaction to the upside. Let's go and take a look at it on the dailies. So we had a move higher, we know that this structure level was held, and we've come down into this lower level of structure right here. I have no bias on this whether we're going to go long or short, so I'm just going to wait. We'll go down to the 240. Been moving quite nicely here. Move lower, pull back, move lower, pull back, move lower, pull back, and then the move lower, and again we have reached our destination. So other than a rotation pattern, not going to be anything here. We will take a look at the 60. Not a great deal, if I'm honest. You do have a move lower, a pullback, a move lower, and a pullback. So if you're looking at trend continuation, you can look at the market coming lower. Again, here on the 60 though, we've not even violated these lows, so I'd be very wary about trying to short this market. Or we could see a rotation here, something like that. Yeah, I would be, I'd be cautious about, if this was a head and shoulders, I'd want an initial structure high, a pullback, an entry here on the left shoulder, and then just play for the AB equals CD pattern. Well, there's a good 40 pips there if we get something like that. So New Zealand yen, not too much for me on that currency pair either. Andrew Chris, if I was to start breakout trading at some future date, what type of breakout would you advise looking for? Backtesting first, and why? Very, very simple, Andrew. I would go over to this. I would check latest trades, and I would select the strategy. Go and put in something like the alternate flag. We've only had 2 trades. That strategy doesn't appear very often, and I've only been recording this data for a few months. Click on flag patterns. Flag patterns have done very well. They've earned 564 pips. Go and check those out, and then I would go and check out triangles. We've had 28 of those and 130 pips. Wedge patterns, very profitable strategy as well. 293 pips earned on that. And the other one, which is our most profitable, is the high and low and tight flag. Well, it has the highest win rate, 61.5%. We've taken a hit, or I personally taken a hit on those the last few weeks. But when I started recording this data, it was during Brexit, when the Brexit date was nearing and we were going to leave the EU, and we saw lots of directional movement, and that just produced lots and lots of breakout patterns. So that really gave my figures a real boost when we started doing this, and we're seeing some of the losers filter through now. But the highest win rate is high and low and tight flags. But yeah, certainly then any of the breakout patterns, triangles, I know we've taken a few of them over the past few months, but triangles are very, very profitable for me. We tend to get very good risk to rewards when we have triangles on the bigger time frames, and we haven't really had any big triangles. So, you know, a couple of months worth of data isn't really enough. But any of the breakout patterns, the flags, high and low and tight flags, wedge patterns, I would take a look at those. Certainly they are a lot more profitable than advanced patterns, so that's what I'd look at. Jamie, we have lots of pound data tomorrow, so we could see lots of erratic spikes. Yep, love triangles and wedges for breakout. I do. They're so simple as well. If you've got a good base for your rules and you know how to get involved and where's the best place to put your stops, they can be very, very profitable. Cody, definitely we'll see some moves from Jamie. Is why we were seeing moves yesterday with the pound pairs, already putting in the moves. Yep. Yeah, Andy, yep, go and take a look at those. Right, let's go and take a look then at the euro. In fact, to be honest, that was almost everything I had on the radar. The other thing was the dollar CAD trend continuation. Okay. The last time we looked at the dollar CAD, we were looking at the market running out of steam, and we were saying just here that we could see a move to the upside. That's exactly what we're doing here. We're seeing a move to the upside. Let's go and take a look at it based on the daily time frame. So here on the dailies, we had the move lower, the pullback, the move lower, the pullback, the move lower, and each and every time we were only just making new lows, and then we had this retest, and then we broke to the upside. Now my concern here is that if I put a structure level on at the very highs, because of this wick, we have not had a confirmed break above, close above. Confirmed break above, close above. Nope, I take that back. We do have a confirmed break above, close above. We just broke above this area. So I would be looking for long opportunities, but this is a bit messy if I'm completely honest with you. We're clearly putting in indecision candles right here. Go and take a look at the 240. On the 240, it's a little bit clearer. So we had this triple retest down here. We had the break to the upside, the pullback, the break again. And what I was looking at was a potential bat pattern. X to A, A to B, B to C, and a CD completion at the 886, and we could look at a rotation pattern down here. Now we have just put in a 3-bar reversal, just here. So the market, we saw lots and lots of bearish pressure, then we put in a doji, then we put in a higher high, higher close, giving us a 3-bar reversal. What does that mean though? Well, unless it comes in at structure, it does not mean a great deal. So let's zoom out. Okay, so that's from the close of the candles to the wicks, and it's actually come into this area, this, and this test just here. And if we look a little bit historically, okay, just those tests for me. So that could be the reason for the 3-bar reversal. Does that mean that we're going to go higher? Not for me. We've already come into this level of structure just here, and we could go one way or the other. So other than the advanced pattern, I don't have anything on the dollar CAD. Just redraw this out. So nothing here on the 60 either. We look at the 15. And here on the 15, Well, you've had a double bottom. You've had a breakout to the upside. If you were a 2618 trader, then you'll look at buying the 61.8 fib up. Now for me, this double bottom, we've already come into previous structure, but you do also have a potential head and shoulders here. So you had a move to the downside, a pullback, and then we formed this double bottom. So it could give you a head and shoulders. For me, there's absolutely no reason to buy this up, and there's no reason to sell it either. So for me, it's just consolidation. Even though we have this confirmed double bottom, higher time frame here, there's just nothing. Nothing. It's just consolidation. Anybody have anything on the dollar CAD? I will move it to the side for the time being. I'll just have a quick scout around. Nothing on the dollar yen. Cody, could you consider the 2618 on the hourly? It's just not going to be an opportunity for me. It's just consolidation. Yeah, I mean, it's valid here. You can clearly see the double bottom, the breakout to the upside. It's just that, you know, this is the most recent level of structure down here, and we haven't come down to it. And we're up at this level just here as well. We're kind of sandwiched between these two structure levels, so there's no higher time frame confirmation. And a 2618 trade by itself is a strategy that I very, very rarely trade. If the 2618 was a strategy I traded all the time, then yes, there would be no reason for me to take this because it is a valid setup. But I use it as an entry reason into another strategy. So for me, it's nothing that I can personally trade, but it's a valid 2618 setup. Let's go and take a look then at, we'll take a look at the pound New Zealand, and we will see what's going on. Okay, daily time frame. Did we get a confirmed violation? No, we did not. We actually held this structure level. However, we have closed within the wicks, and we've closed right at the very lows, and you can see we've pushed lower. So while we have no confirmation on the dailies that we're going to go lower, it's looking like that we could potentially come down to this level of structure. That level of structure comes in at the 180-200 psychological number, and if you are short or playing for some sort of extension, if you're taking more than just structure into account, you can look at fibs, so we can look at an extension. You have a 127 around that area. We can look at inverting this leg from this point to this point. You have a 1618 a little bit further down, but not too much then on the dailies. Let's take a look at the 240. Okay, we've got a very directional move here, but I don't think this is going to turn out to be a flag pattern. I think the angle of this is a little bit too steep. So 1, 2, 3, your fourth test would be up here. You'd be looking in the wicks. Yeah, it's not, I think this trend line is going to be a little bit too steep. Let's take a look at it on the 60, see if it gives us a different view of price. Okay, so here on the 60, we would have to reposition our trend line. It's very early. Yeah, but it would be looking something like this. So we could see the market go higher here for a potential flag. Yeah, we'll wait and see how it forms. We'll see how it looks. But right now, nothing here for me. I'll just go back to this trade. On the 240 then, we were looking at buying the market, guys, weren't we? On this AB equals CD pattern, just like that. We did also have a big cipher pattern, which is still valid. It's actually on the dailies, but so we had the cipher, the AB equals CD pattern, and we looked at this right here as though this could be our head and shoulders. We waited for the pullback, we didn't get it, we went higher. Now, if we look at it the other way, and our bigger picture was that we were coming lower, so a move lower, a pullback, a move lower, a pullback, a move lower. My concern here is that on the 240 we actually had this structure level just here, a pullback, a move lower, and then a move higher. So we violated this internal level of structure. So this 320 pip move, which if we drop down to the 60 you'll see in just a moment, just here, while this was a valid triple top, there was this outside return which we'd violated. But nevertheless, from that level we did get the move to the downside. So as mentioned at the start of this webinar, it only takes one of these trades to come off 340 pips, and it will. We'll catch one of them. Let's go and take a look at the 15, and this is just ugly. Just ugly. We'll take a look at the 5. Andrew says, Chris, as you go on and add more and more trades to your toolbox, how do you decide what to take? At the moment, I'm still I've tested X and it works, so I take them when they appear. Okay, so the strategies are all split. So we have trend continuation. So I have, it's all in the educational material, but I have specific rules for trend continuation. I talk about head and shoulders and how to differentiate between what a head and shoulders is and what a trend continuation is. That was the most common question that I was getting. And I talk about how to do that in the educational material. Breakout patterns are quite simple. We simply follow the rules. We're looking for a swing in the market. We're looking for an entry reason, and we talk about where the entry reason is at previous structure. And we look at the multiple ways that we can get involved aggressively, just based on one candle, double bottom, the breakout, the pullback, and whether or not we play for a retest or whether we play for the extension. And that's the same for all the breakout patterns. And most of my trades are breakout patterns and head and shoulders. Head and shoulders has done terrible the last couple of months. You know, head and shoulders is a key strategy of mine, and it just has not performed in any way. You know, a couple of months ago I was doing YouTube videos of head and shoulders left, right and center. They're all over YouTube, all in my channel. Loads and loads of head and shoulders, some with great rewards to risk of 4-1. I don't think I've even had one of those win in the past 4 weeks. So a change in the markets. We've seen quite a few trend continuation trades because of the directional movement. That's probably why there's been no head and shoulders, because a head and shoulders is a rotation pattern. So it's when we come into structure, we see the rotation the other way. And a lot of these pairs have been fairly directional. And so head and shoulders has done quite poorly. But that will change. That will change. And I'm hoping soon. It would be nice to see some decent head and shoulders. The best head and shoulders we had was on the euro pound last week. And I think I took something like a 30 or 40 pip loss on that. That was for a retest of the highs, and we were stopped out. A day later the market turned and went up. But so that's how we differentiate between them. Yeah, we have specific rules for each of the strategies. So nothing on the pound New Zealand. If you are an advanced pattern trader? Well, you do have a back pattern, X to A to B, B to C, CD completion. We'll take a quick look at the 5 range. But it doesn't look as though there's going to be any dollar entries for me, and I'd be a bit cautious as well about the pound. Nothing on the 5 range either. Another pattern, X to A to B, B to C, CD completion. But nothing that meets my rules. We'll move that one off to the side. I really didn't have anything else, guys, to talk about. There was nothing here for me to go over. Do you guys have anything you'd like to look at? New Zealand dollar breaking to the upside. That structure level we looked at didn't hold. Wasn't a valid flag for me anyway. We'll take a quick look at the pound dollar. A few of you were looking at a potential wedge pattern here. It isn't going to be valid for me. It does meet the rules, but it's on the 60. In fact, let's do the higher time frame analysis on it, and I'll talk through this trade. Euro CAD, okay. I'll do the Euro CAD after this. We'll call that the last one. Pound dollar. Pound dollar. Well, we came to the area that we spoke about. Unfortunately, did not get involved. As we go to the 240, let's look left. Did we hold that structure level? That was the low of that structure level. Did we hold it? We've not actually come down into it yet. So we've had a very, very big bearish run. And what we're seeing now is some sideways movement. And that sideways movement will no doubt be as a result of the news that's coming up. And as a result of the news, we're probably going to see a move higher or a move lower. Probably not sideways. So we're likely going to go up or down. The question is, which way has the highest probability? And if this was a valid opportunity, a valid wedge for me, I wouldn't know where to draw the pole from. Would it be all the way up here? Or would it be from this little area just here? And so I don't have a definitive swing in the market that is going to tell me, look, this is the area where we need to draw the pole from. Let me show you this. Bring over the euro yen. This here is a clear swing in the market with a directional pole. Okay, that's how I like them to look. This on the pound dollar does not have that. So that's my concern straight away. The other thing is when I come to draw this out, I need it on the closes of the candles. Now, if we drew it here, well, we've already had hours and hours of moving this way, so I'd have to move it to say here, and then I'd have to draw it on the closes of the candles here. So 1, 2, 3, 4, and we've had multiple tests now, and as you can see, we're just moving sideways. And that's what tends to happen with these wedge patterns. It's not very often that just from this point we get the break to the downside. It's just I don't have a clear swing in the market. It could be from here, it could be higher up, and it's just not moving in a way that I'd be happy to take this trade. On a trade this size, I would have seen usually a bigger pole. So it's just a few concerns there. It does meet the rules, but I'm going to be staying out of that one, particularly since we have the pound news that's out. Yeah, Cody, lol. Yep, I'm a good trader, aren't I? I can tell you it's going to go up or down. There we go. Am I wrong? I got nothing on the pound dollar. We will take a look at the euro CAD. Can, what's your bias on the euro CAD? Long or short? Euro CAD. Okay, so my first thought is a lovely bearish run, and then this was our low. So if we were looking at this in real time, We want to see, are we in trend or is the market moving in a directional way? We had a spike lower, so we move our low to this level. Did we have a confirmed break below close below that level? No, we saw another spike. Okay, so this right here, nothing but consolidation on the dailies. Let's get a bigger picture by looking left. So bigger picture, this is the next level of structure, even a little bit lower down to this point. Although you can make the case just here that we are at some internal structure and we have just about tapped that area. So just based on the dailies, I don't have anything here. Whether or not this is some form of falling channel on the 240, we can take a look at it. But this type of consolidation, Khan, is not something that I would get involved with. I love the bearish run. We saw the pullback. We then had a move lower. We then saw a pullback, and we've just then held this area. So the only bit of price action that's actually tested any form of structure is this. And if we look left, it is only that, it's only this internal level. The actual lows here are down at this point, so this wouldn't even be a setup for a head and shoulders for me. So I'd be a little bit cautious on this. It could go one way or another. My actual thought is that we're probably going to come down and retest this level at some point, but I would wait because we still could break to the upside. But just because I don't have any rules for trading this type of setup doesn't mean that we're not going to go long. You can also look at this and say that this is a sign that we're running out of this bearish pressure. We've hit consolidation and we could see a rotation. It's just that it's not set up in a way that's going to offer me an opportunity, and we've only just had one spike down into structure and it was minor structure. Yeah, the trend change. We could see a move higher, but we could see a move lower first. That's the problem. Now, if this was further down here within this level, this lower level of structure, I'd be saying that this is a sign that we are running out of strength here. We could see a rotation because we've come down to the structure lows. So wait and see. I would. Yeah, we could see a pop to either side. But if this was down here, I'd say that we had a higher probability of seeing a bullish move rather than a bearish one. Any questions on the Euro CAD? I will take a look at the lower time frame. We'll take a look at the 60. Got a lovely swing in the market here, a directional move. This is not going to be any type of breakout pattern. You're having a retest right here now. We'll go and take a look at this on the 240. Yeah, if you was looking at this as being a triangle, your problem here is that the pole, or even this level here, has not violated this level of structure or this level of structure. So while the market may indicate we're running out of steam, this actual breakout pattern has no confirmation it can go higher. But if you are aggressive, it wouldn't be one for me. But if you are aggressive, your fourth touch is here, you're getting a double bottom. I wouldn't be super aggressive. I would wait for a confirmed break above, close above, so that it confirms this retest, and then look at getting involved. But if you just look at the size of this, you can see there's lots of room for the market to come up and still come lower for another test. And if you was to do that, that would add more confirmation. This would give you 3 tests along the top, give you more confirmation that this could be a triangle, and then look for another entry when the market comes back lower. because this size of trade, there's still room for it to come up and do exactly the same thing again before you get the breakout. So it's not going to be one for me, but if you were, and this is for you, that's how I would handle it. I wouldn't enter now, I'd wait for a confirmed double bottom and use that as the entry. And if it came off, you'd have a very nice reward to risk. And this type of setup is what I mentioned before, Andrew. Because I've only been recording this data on the website for a few months, we don't have, a huge variety of trades. But if this was a valid triangle, these are the opportunities that I take. These do happen quite often, and you end up with a 2.5 to 3 to 1 reward to risk, and very often we do get retests or double bottoms down in these areas. And you don't need many of these to come off for it to throw you into profit. In fact, if you just traded breakout patterns the way that I trade them, very, very profitable. In fact, this is over a 3 to 1 reward to risk, even if you waited for this to be a confirmed double bottom. Again, I'm using this as an illustration, it's not valid for me, but yeah, if you just worked breakout patterns, and there may be a point, I did mention this a few weeks ago, there may be a point when I decide that, I just want to spend less time in front of the charts, and I'm going to reduce my trades to just breakout patterns, because the rules that we have mean that they are very, very profitable. And you can just increase your position size. Once you know what your drawdown is, you can alter your position size to suit, can't you? So it may be a case that I stop trading everything else apart from breakout patterns, and I may just double or triple my my position size, and I only do it when I have a confirmed double bottom, and I may only get, say, 5 or 6 setups a month of this type of strategy, and maybe a dozen of other breakout patterns. So maybe just 2 or 3 trades a week, and I'm very, very happy just to take that. So that might be something I do in the future. So that is the Euro CAD, guys. I'll have a quick look around the markets, but I have nothing else. So if there's no questions, guys, we will start to wrap this up. Euro New Zealand, take a last look at that, and as you can see now, we violated to well, the trade is still valid because we're still within this zone, but we're pushing lower. It's typically the middle of these that we tend to see the rotation. So pound New Zealand, we did the right thing, we stayed out. It was a lower probability trade, and we will see what happens next time on the pound Aussie trade that stopped me out by 1 pip. Thank you, pound Aussie. So guys, if there's no questions, there will be another YouTube live Thursday, and I'll try and get one done for Friday as well. Cody says there is a New Zealand dollar cipher setting up. Okay, New Zealand dollar cipher. Are you talking about this one? X to A to B. Better draw it out first, aren't I? Is it valid? Okay, set on the 60, so let's go and have a look at the 60. I think you're looking at this one, Cody. Was it the 60 you was looking at? X to A to B, B to C, CD completion around this level. Potential cipher there. Bit lower than that, I think the 786 is. So if you are an advanced pattern trader, cipher pattern there. Okay guys, well, thank you for joining me again. I will see you in the chat or tomorrow on the next webinar. Thank you.